What's up, guys? It's December 10th, 2024. Nearing the end of the markets. Looks like we had a bear channel day. We had a pullback, from yesterday's bear trend, bear trend, pullback, and a sell. Daily chart, 15-minute chart. 15-minute chart looks pretty nice. Let's talk about the daily real quick. The daily chart, leg one, pullback, leg two. Let me draw it. Leg one, channel line break, leg two, channel line break, leg three. Also, leg three becomes a high one. That's a high one in a trading range. It's a sell. Leg one, pullback, leg two. Now the bulls gonna get their pullback. We still have a lot. We keep 1, 2, 3, 4. We have 8 bull bars and a couple bars with no body, so about 8 to 10 bull bars above, almost above the EMA. Now we have a pullback. We're testing this high here. We don't know if the bears are gonna get another leg down, or bull's gonna get another leg higher. Can you guys hear my dog? He's like running into the door. He stopped as soon as I said that, so I hope you guys can't hear him because that'd be very annoying. 15-minute chart, leg one, pullback, leg two, pullback, leg three. And then we also have just for today's price action right here. Leg one, pullback, leg two, this bar, charts leg three, no trend line break, and then, excuse me, I said that wrong. Leg one, so this bar breaks the high, pullback, leg two, this bar breaks the high, leg three. We have an opposite bar here, so you could say that's the start of leg four, leg one, pullback, leg two, pullback, leg three, pullback, leg four. But there's no bear channel line. So this high breaks that high, so that's the start of a new spike. And then this leg doesn't get a new trend line break till down here. So there's always a couple ways to count legs. It's not one way better than, there's no one best way. I think you have to kind of learn it all. And you do it over time. It's not going to happen tomorrow. Let me delete this real quick. Okay, so yesterday we had a bear channel. We had a bearish breakout below the higher time frame EMA. And when we did that, the always in regime flip. This is the 45-minute EMA plotted on the 5-minute chart. And this is the 20 EMA, this is the 20 EMA. This is the 45-minute EMA plotted on the 5-minute chart. This is the I always get confused how to say this. Okay, this is the 20 EMA. This is the 45-minute 20 EMA plotted on the 5-minute chart. This is the 5-minute 20 EMA also plotted on the 5-minute chart. Anyways, so yesterday we had a bearish breakout. And today we had a continuation. We had a bear leg down yesterday. We had a gap up today that sold off. 50% of channel breakouts fail. So let's draw this in actually permanently real quick. So here you have a bear channel, and then we rally above it. First trend line break after bear channel, testing just a little bit above the midpoint. Kind of looks like the breakout point around here. So rough estimate. Let's just draw the line. This is 16 high. Yeah, so we're testing the breakdown point, bar 50, yesterday's bar 55. I'm gonna delete this line now. I'm gonna leave that line here and delete, so you guys just remember the context of the day. Break the trend line, go a strong bear bar. We're trading within this bar one's range, and then bulls get a 3-bar rec channel, pull back. So there's a couple ways to count this. You can count like one, deep pullback, like two, pullback, like three, and that is a good way because bar 5 breaks the trend line. So this is the start of the leg 2. This is the buy low sell high play. The first 30 minutes of the day can be fades. It's a fade season, so you could fade bar 1, you could fade bar 5, you could sell this bar, you could sell more here, sell more higher, and scalp out. That's not what I do, but the price action showing us that bulls were making money buying bars, and bears were buying bear bars, and bears were making money shorting bull bars. So fade city, leg 1, pullback, leg 2. Bar 9 is a trend line break, but it's a bull bar, so you could say we're breaking out of this range here. Leg 1, pullback, leg 2. Trend line break, deep pullback, bar 13 becomes like 3. A couple ways to count that. Leg 1, pullback, leg 2, pullback, leg 3. Leg 1, pullback, leg 2, pullback, leg 3. 15 is a high one at the top of a trading range. High one at the top of a trading range. High one at the top of a trading range. Led to a sell-off. 16, 17, 18, three bar microchannel. It's a bearish microchannel. Leg one, pull back, leg two, pull back, leg three. Once we get into the third leg, bar 28, we go more sideways. We see that sideways price action with 35, 36, 37. Creates a wedge top here, creates a wedge top here. Could be a second leg trap. Second leg traps are very common. Bulls get no continuation, so if you buy this, you're getting trapped. You have a moment to get out. Barely. You're gonna have to take a hit unless you bought more lower. You could say this bar strong to get its own leg too, and maybe it did. Let's see. Bar 37's high is 68.50. This high is 68 or 68.50. So it got a double top actually. The market never went one tick above it. They both got a double top on this bar. So if you bought this bar, you have barely a second to get out before you're just underwater. You can buy here and get out break even, but that's a sketchy buy. It's a hard buy. You could always average out, but I think sometimes it's better to just, the best thing you can do is just take minimize your hit, whether it's 1 or 2 points, or maybe you made a mistake and it's bar 45, and now the best option you have is just to get out. Here we see the market did travel back to 50%, so you could buy here and get out. Or you could just get trapped here, get out on the bearish breakout, wait for the pullback, right? 1, 2, 3, 4, 5. 5 bear bar microchannel, wedge top into the EMA, fade bar 50, and you cash the legs lower. You make way more points here than you did just getting out and accepting the loss. So again, we have that 5 bar microchannel, wedge top, leg 1, pullback, leg 2, leg 1, pullback opposite bar 47, leg 2, tail that doesn't break the low, but it's a trading range bar, it's a pause bar, so we have that wedge top ish. If we go to a smaller time frame, we will see the wedge top here. Hold on, that's the start of it, the end of it. So there's the 3 pushes. Excuse me. There's the 3 pushes. Push 1, pull back. Push 2, pull back. Push 3. And then bears get there. Bulls get trapped here. They buy more lower. They get out, creating a double top. So that's a trend line break. So see, are you guys starting to see how price action is fractal? Let's say this is the sell off here from here to here. Trend line break. It sells off to a new low. And that's the same setup we just talked about right here. See, sell off, trend line break, pullback, new low, sell off, trend line break, to pullback. So this is the trend line break, and it's a pullback. It sells off to a new low. New low breaks out, creating a leg 1, pullback, leg 2 ish. This is interesting. Hold on. Again, multiple ways to count. Opposite bars are the easiest way to count. It's just an opposite bar. Okay, next leg. Leg 1, pullback. Leg 2, pullback. Leg 3. But it's interesting because leg 1, pullback, breaks the trend line. Leg 2, 63 breaks this trend line. So now we're in the leg 3. 66 breaks this trend line. Leg 4. 75 breaks the trend line. Leg 5. And we're in trading range now. So yeah, pretty nice market cycle again. Market the opening was kind of more, it was more rangy, you know. Here's that range. Then we break out with this bear leg and it resets the market cycle. And there's a breakout gap here. So yeah, pretty cool day for the bears. Finally getting some movement. It's crazy how this looks like a trend, but if you traded it, you know it was a little bit harder to trade than as clean as it looks. Excuse me. Okay, that's 3 bar microchannel, trading range, buy low, sell high. So we put that here. My stop would go down here. My target would be here and then here. And I actually don't even know if I would buy this. I might buy bar 9 because I would count it like this. Trend line break here. But but nonetheless, 2, 3, 4 is a micro channel. It's 3 bars, but this is also 3 bars. By that, and then look, it ends up failing. Bar 13 is an outside bar that puts us at trading range. Bar 15, high one in trading range. High one in trading range leads to a sell off, and now we start to get a little bit. We can have some fun. We have a 3 bar micro channel. Put it on the high of 19 because it's a pullback. 1R is barely met with bar 34. Leg 1, pullback, leg 2, pullback, leg 3. We have another 3 bar micro channel here. I think this one will get stopped out. Oh wow, look at that. 1R is met quickly with 2 bars. If you make 1R very quick, it's best to take profits just because maybe the market's moved too far too fast. And we are in a trading range, so the market can back in, which would explain why the bar looks a little bit bigger. Bar being in a trading range is running like 3, any leg past 2 is a trading range. Whether you want to believe me or not, unless it's a small pullback trend. Most of you guys are price action traders. A couple of you I've been poking around or trading other objects. So that's none of my concern. Anyways, back to the conversation. Leg 1 pullback, that's the second leg trap. That's not a setup. It is a setup, but we're not going to talk about that. Talk about micro channels only. 1R is met quickly. It's not met quickly. 5, 10, 15, 20, 25, 30, 35 minutes. Not bad. I think this is trying to get its own second leg. So maybe you want to run the trade. Get an extended target, put it at the high of 60. Maybe put it here. Short 60, 64 is a low 2, and that's also met. So there's a couple of ways you can play it. Anyways, all the targets are eventually met. We're in a trading range. I mean, we're in a bear trend. It's late, and then the market goes sideways once we get into leg 3, leg 4, leg 5. Hope you guys had a good day. We did have some gaps. Zero height gap. The reason I talk a lot about gaps is because it shows what the market is doing. If gaps are staying open, one side has more pressure than the other side. If gaps are closing, we're range bound. These gaps are happening around the EMA. So bulls are getting trapped. They're trying to buy into the EMA and the market's reversing. So there's more sellers at the EMA. So yeah, there's probably more gaps I missed, but that's the gist of how I trade. I look for gaps and I look for micro channels. Hope you guys had a good one. I stayed flat today. I'm gonna be flat for a couple more days and just like soak in this loss I took yesterday with my first own money account. Anyways, you guys have a good one. I will talk to you tomorrow. Please drop some questions. I love talking to you guys. I appreciate the support through all of you. I hope you guys have a great Christmas and spend it with your friends and families and drink wine and eat and whatever you guys like to do. Even if you don't celebrate Christmas, I still hope you're having a good time. I'll talk to you guys later. Bye. Have a good one. Good night, everyone.